So this is a universal corporate analysis framework for, fundamentals. And we could use it in various occasions, such as analyst reports, especially initiation reports. If you closely look at them, they're composed in this fashion. Investment relations materials, investment memorandums, pitch books are also constructed in this format. Again, stock pitch frameworks, I'm not saying that you should, prepare your stock pitch in this order, but what I am suggesting is that you shouldn't miss any of these key points. So you should use this framework to analyze your company that you're pitching for. But when you're actually doing your 1 minute or 2 minute stock pitch, you should come up with a summary which is in the front. Consulting decks, if you're working for BCG, McKinsey, or Bain, consulting decks are very often constructed in using this framework. And of course, because that is the case when you're doing case interviews, preparing for case interviews for strategy consulting, you should always think of this framework and apply it, especially if you have cases that concerns new products, new industries, going to new markets, or in investment opportunities. This is the case that you want to. This is the framework that you want to follow. So we start from the industry. We always start from the industry, because if no matter how attractive your company is that you're analyzing, it doesn't matter if the industry is very unattractive. So we start from it's like a top bottom approach. We start from the industry and look at industry size, because size matters, right? Size matters. Also, growth is very important. Even if the size is very small at this moment, maybe if its expected growth is very high, it could be an attractive investment opportunity. Also, profitability is also very important, because if it doesn't matter if revenue is $100 million, $100 billion, but if profitability is negative, it doesn't have any attractiveness. So profitability is also important, the overall industry's profitability, and also maybe recent trends concerning the industry, which maybe is a factor that affects the other components of the industry. So so normally, let's take initiation reports. There could be a model that concerns industry size and also reflects industry growth, and there could be a chart, usually, right, that shows how much the industry is going to grow, like like CAGR and year-on-year growth and expected growth, especially if the industry is attractive and quickly growing. Next, we have competition. First of all, we want to define what success factors, what are the key buying factors of this industry? What makes the customers buy the products, and what makes companies or competitors successful in this industry? Defining these factors are very important before even starting to analyze the competition. And then you have to define who the key players are, and find out a little bit information about the key players here. And then we're going to be focusing on the market share, and if you have a model, hopefully the forecast to the market share as well. And you're going to be comparing it by player and competitor, and also the target that you're analyzing. So we want to find out if our target, how much competitive advantage our company has versus our competitors here. And then now finally we look at our company. So basic company profiles, what kind of products do they make, the shareholders, who are the shareholders, what are the do they have any subsidiaries, and so on. Do they have any significant investments? And then we also look at company history. These are very basic profiles of the company. Company financials, I'm talking about historical financials and how they performed in the past, and the current as is balance sheet items as well. And then we usually move on to projections and valuations. So this is kind of like the conclusion. So because of the industry, because of the competition and so on, we value this company at this much. And this is kind of like the conclusion. Of course, we also always want to do an answer first sort of pitch to, especially in the finance sector. We want to do an answer first. So usually this projections and valuations part is summarized in the front on the cover page or the investment thesis. So, but you know, from the industry to the company, it's a top down approach, and slowly you reach your conclusion. So there's a whole story to this report, if you should say. And lastly, usually we also have to touch on the risks. So we always want to avoid any potential liabilities. Maybe it could be a legal liability, or maybe it's just a moral thing, a moral issue. But you always want to state the key risks to your call. If you say this company is attractive, you always have to mention the key risks where your thesis might go wrong. Also, on the other side, if you're saying that this company is unattractive and you should short this stock, the key risk should be the opposite. Also, not many times in analyst reports, but if you're doing any case interviews or stock pitches, maybe you should be also looking for synergies, especially if you have a specific audience in mind, and if the audience is strategic investors who are looking for synergies or any horizontal mergers or acquisitions. In these cases, especially synergies are another point that you should tap, and more than often it should be also reflected in your financial model. So this is the universal corporate analysis framework, and we're going to be using it when we're analyzing our company. We're going to be using it when we're preparing for our pitch book classes. We're also going to be using it if in the future maybe I prepare some lectures or lessons for case interviews. Hope this helps, and I hope you like this video, and let's now move on to our financial model.